While some CEOs are making headlines going all in on Bitcoin, my next guest took a bold call 2 years ago, selling all his equities and going 100% in on gold. We'll find out where his stance is today. He's Peter Grandich, CEO of petergrandich.com and the author of Confessions of a Wall Street Whiz Kid. Peter Grandich, good to see you. Welcome back to the show.
Always a pleasure to be interviewed by you, Danielle.
Thank you, Peter. So what's your stance today? That was a bold call 2 years ago. How do you feel today? And what did you do with that rally when we hit $2,000 an ounce?
You're right. Summer of 2018, I sold all my general equities but one and placed a fair amount in bullion and some in mining shares, and then traded a little bit. But just before we got above 2,000, I decided to move it gone parabolic earlier this year. And while it could go further, it was time to take profits, which I did. And most recently, in the last couple of weeks, when we got down towards 1850, I expressed to my followers that it was a good time to get back in pretty well. There's still an opportunity for one more move down, but I don't think it'd be a lot. So I got involved in gold again, but this time way overweighted in the mining shares. I think the leverage now that mining shares afford are going to be played out. And while gold will go up, I think mining shares in the gold area will outperform the actual physical bullion move.
All right. Two very important points there. So first, you say you still think it's a good price to get in here because a lot of investors I speak to are afraid the price is too high now.
Well, we've had mostly bear markets, even though this is the craziest thing. You ask most people that have played bullion for the last couple of decades, they feel like more times than not, they were always down. Yet, since the year 2000, gold itself has outperformed the S&P 500. And yet, if you ask anybody that's invested in the S&P 500 the last 20 years, they think they've made $1 zillion. So it's more a perception than reality. And of course, because it used to be so heavily attacked and those that disagreed were proven wrong recently, we found that it was a manipulated market for a lot of years. They haven't recognized that this is just playing catch up now, that the real movement in gold now is happening for reasons that are far more than just speculative. It's happening because people realize there's a race to debase currencies around the world. The debt issue continues to get from bad to worse. And of course, the social and political issues and the geopolitical issues that a lot of people didn't pay attention to for a lot of years are another justifiable reason. And of course, there's not that there's peak gold, not that there's going to be suddenly a shortage, but there hasn't been a lot of time and money spent on it. So there's not going to be a whole bunch of new ample supply to hit the market to depress the price. So I just think it'll work higher. I personally don't want to see a $5,000 price gold, especially in 12 months, because the world we're already living in now is pretty difficult. And I think it'd be far worse. But I do think it can get up into the 24, 2,500 area. And at that level, gold mining companies, they'll be printing money. That's how well they'll do. And that's what the leverage that we talked about for years. And it's finally before us. And that's where I think the real opportunity is going to come.
You just mentioned something very key, because I know a lot of people are praying for the $5,000, $10,000, $20,000 gold. But I always ask people, well, you have to ask yourself, would you be comfortable living in that world? So could there be a situation where it's actually an okay world and gold is at 10,000 or 20,000, or does it have to be utter catastrophe for gold to get there, Peter?
I think it would have to, first of all, the main drivers for gold, despite what a lot of people say, and I know there's people that make a living, I used to be one of those in that area. But listen, the main reason gold has moved now is because it's really an alternative currency to paper. And people realize that paper has been cheapened, not just here, but around the world, from all these central bankers just creating tens of trillions of dollars of money out of thin air. So the first understanding is, it's really an alternative to paper currency. So if there's a continuing decline in confidence in paper, that can accelerate it up. But remember, if there's a declining confidence in the paper of a country, it means they're not too thrilled with the country either. So I really think it has to be serious turmoil to get us to that level. But what people miss is at just another 20% increase, say to 24 or 2,500, the profit margins for mining companies, especially now with costs so much lower and coming off of bear markets for a lot of years, the performance that people are going to see, what people pay for technology, they won't have to pay such exorbitant PEs, and yet can see the growth that we're going to see. And there's going to be a marked increase in mergers and acquisitions simply because all these mining majors that produce 3, 4, 5 million a year, there's just not ample supply to keep replacing that. So it's almost a perfect storm still for the gold market and miners. I mean, gold miners I know privately would tell me now, if they could have $2,000 as the price just for the next 3 years, they're going to make a lot of money. So that's why I think we have to focus on the mining side.
Okay, I want to go deeper into that because Peter, I was kind of surprised to hear that when we were speaking offline that you're preferring the mining stocks now over physical bullion. And this is a question that people often ask. I want to invest in gold. Do I buy physical? Do I buy the mining stocks? Do I look for an ETF? Why the miners for you?
Well, for me, I'm just looking for capital appreciation. As bad as things get, I have my spiritual life gives me a sense of peace that I feel I don't need gold in my backyard or buried somewhere so I can get a loaf of bread when no one else can. And literally, when you talk to the 5 and 10,000 predictors, they're also predicting such blood in the streets that things are going to get that bad. I don't look for it, and if it was to occur, I'm not going to worry about the things that supposedly I should have gold for, or a cabin, or dry food, or guns. But the idea of capital appreciation now, to know that it's very rare that most companies can see fixed costs stay within a range that mining companies will see for the next few years. There isn't going to be a likelihood of a big spike up in costs. Certainly the oil market, which was once higher, is not going to be a very high priced market. So fixed costs for mining companies are going to stay flat. So that return that gets to the bottom line happens pretty fast. And that's the whole idea about capital appreciation is to buy companies that are going to be more profitable. And I just think most major mining companies have bright futures.
And that's a really good point, Peter, that we don't probably speak enough about is that how the costs have really come down for the miners, like oil and energy needed to get the gold and silver out of the ground. So what miners are you liking? What jurisdictions?
Well, I think it's funny. I was talking to someone recently. As you know, I've been out of the metals and mining industry
Yeah.
for over 7 years, but I still have conversations. I myself, and this is highly biased, I've accumulated a 6% position in a company that has already a joint venture in a known deposit of over 3 million ounces in an area of the world which I think is among the safest and best places to prospect, has always been. But now, because of all the geopolitical concerns for miners around the world, it's become very difficult to point to places on the map in the world and say, hey, that's a good, safe place to go. And the place that I feel is Quebec. And what's interesting is there's now a renewed gold rush because of significant discoveries in Quebec. So, I don't know of a safer place, and it's in many of our backyards. It's an area that welcomes mining, and it's part of people's livelihoods. And there, a company called Vanstar Mining has a deposit that it's joint ventured with IM Gold. It now has a couple of exploration projects, one sitting right in the middle of a budding gold rush. One of the companies to the north of it is tripled in a matter of 2 months. And so areas where companies mine is very, very important now. And like I said, I think pretty well you're going to see more and more people talking about Quebec and this area play. And a company like Vanstar Mining, where you get a deposit that already covers your entire market cap and then some, plus you get the exploration on the upside. The loss of principal, which is normal in junior resource market, is not something I'm expecting here. And that's why I've taken such a large position.
Well, obviously, I have a bias towards Quebec. That's the province where I was raised and grew up. So happy to see, the industry pick up there. You also like uranium. Why?
Well, I've been in and around the financial arena for 36 years, was very involved in mining for 25 of those, and always liked commodities through it. I believe we're about to see perhaps the single best bull market in a commodity and that's in
There-
uranium.
There's been so much pain in the uranium space, though, Peter, probably more than gold and silver. It's so bound to regulations and what governments will do, more so, I think, than any other commodity. I mean, I just saw a report this week that Spain wants to ban all uranium mining in the country. So how do you go up against that?
Well, first of all, I've never been a uranium bug, so it's not like somebody, I know there have been people that for a lot of years spoke about it. I was never involved in it. But given what we're facing in the world, given the uncertainty for different types of industries to be any certainty of revenue and growth, here we have an industry that has been decimated, as you said, has really been beaten down to the pulp. Last one out turned the lights out. So many people have predicted rallies that never occurred at a time when production is declining dramatically, supply. Demand is constant and going to increase. And for every Spain that you speak about, look around the world, even here in the United States, we're building nuclear reactors again. China itself, the growth potential for the need for uranium. Listen, everybody wants a gadget. Everybody wants electrical cars. Well, guess what? You need power. And what they're finding is all the windmills and solar panels and all that aren't enough. So nuclear energy is going to remain an important source. And providing there isn't some disaster again, which you can never rule out, but you don't expect it. And the fact that the industry is moving to these smaller nuclear reactors, which are going to be offer more safety. The window is so small, I wouldn't even have to raise both my hands to you to count all the known producers.
Right.
That's why a company like Cameco at this point in time is just, you have to own it in my book. So again, the little juniors, yeah, they may rise, but they'll never produce in time to make it in this cycle of the boom. So I would really focus on the main producers. And that's why for my portfolio, and I'm only here speaking biasly about my own holdings, Cameco, and then like an ETF, like symbol URA that has Cameco and other producers. That's the best way for, I think, for most speculators to play it.
So you're back in the stock market, but just with the mining stocks, you wouldn't touch, large caps.
The U.S. stock market is destined for very serious problem in 2021, no matter who wins the election. Okay, there could be a dramatic relief rally, particularly if, believe it or not, Trump wins again, like it surprised everybody in 2016. But the fundamental factors facing the markets, given no matter who comes in, the fact that there'll be no movement whatsoever politically to do anything that's important for Americans. There'll be no fiscal good policy. The feds will just keep printing money like there's no tomorrow, and valuations at historical highs. You just can't be bullish long term for the stock market. Doesn't mean there can't be a relief rally after we get through this election. But into 2021, I'd rather have no stocks than a lot of general equities.
Finally, Peter, I know you were involved heavily in the sports world. I know you've advised many NFL players from the Jets, from the Giants on their financials, but you've left the sports world.
Yeah, it was probably the toughest business decision I ever had to make. You're right. I had a business for 20 years. I still deal with the public, but another division handled professional athletes. I was 13 years with the New York Giants doing Bible study in chapel. I had over 27 NFL and NHL players, but because of what happened on the political realm here in the States and how teams and athletes became involved in a movement that went against my own Catholic Christian faith, it would have been hypocritical for me to continue it. And here's the interesting part to close on. As much as it was a financial loss leaving, that hasn't hurt half as much as not actually watching it. So on a normal Sunday, I think there's somebody I know that's a Jet fan that lives in New Jersey. I would be able to sit and watch football with me, the greatest Jet there ever was, Joe Klecko, and not on Sunday to be sitting with him and watching football was far worse than the loss of. But sometimes you have to make tough decisions, and it would have been hypocritical for me. And we're already seeing now, like the NBA seeing such a drop in viewership. Listen, it's an entertainment and leisure industry. People go there to get away from what's happening in the world. And if those guys want to protest just before or after they're done with their job, I don't think people have the problem. But to do it just like if I was going to a restaurant or a theater, I want to see what I want to see and not hear somebody telling me what they think.
Right, right,
And that
right.
was the decision that I made.
I could definitely vouch. It's been painful for my husband, and this could have been the year. Brady's out of the Jets division finally, Peter. So
The Jets can't win until Joe Namath passes away because he sold his soul to win the Super Bowl back in '69. So you're going to have to wait, unfortunately, to the
I'll,
great
I'll
Joe Willie.
tell. I will tell him that he'll have to practice patience. Peter Grandich, come back on the show. It was good speaking with you, and I wish you luck with your investing.
It's always an honor, and you're the main reason why I'm willing to come back. So keep up the great work, Danielle. People are very fortunate to have you leading these interviews.
Thank you so much, Peter.
God bless.
Getting emotional there. Thank you so much. And thank you for watching. We'll have much more for you on Stansberry Research. In the meantime, you can follow us on all our social media channels. We are on Twitter, LinkedIn, Instagram, and Facebook. For Stansberry Research, I'm Daniela Cambone.